The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, and even more important than that, we always have great programming here. You had just fabulous 3 hours so far from 8 o'clock to 9. You got John Logan, 9 to 10. You got Steve Rhodes, and you had Tom O'Brien up there. You got Steve again, 10 o'clock till 11. I come in here, do my best from 11 till 12. Today's Thursday. So we've got Larry Pesavento. Then you've got Daryl Martin. You've got Dave White. You've got Tom O'Brien. And then right at the end, you've got, excuse me, you've got Andy Hecht. So we've got programming all day. So let's just do this. We're looking at the E-minis. Now up 575 at 1228. I've got a little pattern here that is called the Chapman Wave Expanding Wave Formation. It's a double of that rather large one from the 2119s down to the 2158 or 9. Was it 2157 round number low? Let me put that one in. 2157 round number low. And if I'm reading this incorrectly, it'll be really obvious because by Tuesday at I would say even by noon, Tuesday, the S&P will be below 2112, and that'll be a failure pattern. I don't think so. I think there's enough remember, the most important thing when you've got a phase in progress, whether it is a shorter-term trend or whether it's a long, it doesn't matter. To go with that trend, you want to see higher highs and higher lows or lower lows and lower highs. You want to, if it's bullish, the market has to ignore anything that can be represented even remotely as bad news. And when it's bearish, every little bit of news, whether it's bullish or bearish, will drag the market lower, as we saw about a week and a half ago, where the market intraday just couldn't hold its gains and kept closing towards the low of the day. This is very different. And in this particular instance, what we're looking at, and this is very important, you see the 120-minute chart. Well, I show this to my members every single day. I don't give trades. It's almost like it's like another service. I don't do that. I do that with everything else. Basic trend is what's positive, what's negative, and where the support level is. Look at this cup formation. After the peak D at round number 2134, made on the 19th, I think it was early in the morning. Yeah, 19th at 4 a.m. The market kept coming down, went down to 2115, the most recent round number low, which was a round number. Went to peak A early this morning, then pulled back, held the 9-period moving average as the MACD and the slow stochastic started to improve, and boom, it went right to the dashed line. Resistance is testing that right now. If everything works out, then this green line right here on the right side, left side, right side price time match says that somewhere in tomorrow's the 22nd, somewhere before 4 o'clock tomorrow, there should be at least an attempt to get close to the 2132, 2134 level, maybe even break it, we'll see. But in the meantime, the support is very strong at this particular stage at 2124 to 2122. All right, let's get out of this. Let's go on, and we're going to look at the Dow. Let me just show you the chart that I show my subscribers every day. And this is the Dow chart. I discussed yesterday, and I showed there is a soft, what I call a soft W formation. I'll show Amazon in a moment. It's got the same sort of thing. And that basically says that there should be a test, an attempt at least, to get to the old high of 18,288 that was made on the 2nd of March. If it breaks above that, there should be a gentle move to the upside. But if there is a screaming breakout in what I call the Chapman Wave Cup and Ladle breakout, where it slices through 18,288 and really starts to challenge the 18,350 to 18,370s closing up there, that says, at least for now, keep in mind that the uptrend is intact. And I suspect that all you need is 18,352 in the Dow to start leg C, rather than, I don't see this as a peak F. I don't see any of the signs at all. I've got an alternate count. At this particular point, it's really looking like it's going to be a leg C and then a leg D. So sometime next week, we've got to be careful. It doesn't say when. Other things will tell you when. But at this particular point, it says there should be an attempt to get into the Chapman Wave inside track sell zone, which would be take it from today into Tuesday, let's say. That'll be between 18,370s and somewhere into the 18,430s. It could even go up to 18,460 because that's this trend line. Now, what's really important about this is that the stochastics at 93%. That is good. That's very good. And the MACD is still expanding. It's not as good as it was back when the Dow hit its previous all-time high on the 2nd of March, but it's still pretty good, and the histogram is positive. So enough with that. Let me just have a quick glance here. And the VIX is down at 12.49, having a tough time. And the 120-minute chart, it's gone to a peak D. It needs that 18,352 to break out there on the 120-minute chart. Now, so those are the parameters that we're looking at. The Dow only needs to go underneath INTU. All it has to do is to break under 18,170 to really show that the strength is waning and it's starting to fail. But so far, the technicals suggest buyers are coming in on every pullback. All right. Weekly chart leg E, monthly chart G/C. Let's get into the S&P, SPX.M. So now the S&P. So my bias is towards the upside. I think it's limited, but I have to see the Chapman Wave hold, and I haven't even got to the S&P. Everything about this says that this is leg B, a G. Sorry. It's not an alternate count, F/B. It is really a B. And then I need to take that plus sign at the bottom because the stochastics at 92%, that's good. MACD is still very strong. It's actually even better, a little bit better in some ways than it was on the previous rally. I like this. I'm going to put in an up arrow. I'm wrong. I'm wrong if the S&P, which is at 2130 up 485, breaks under 17 in the next 3 sessions. All right, weekly in leg E in the middle of an up channel, and we've got the monthly chart, which is broken the left side, right side price time match by 1 month. It's gone slightly higher than the previous month, and this goes back all the way to 2000 to the low of March of 2009. No, sorry, it goes October high of 2008, back down of 2009. 666.79, and then all the way to last month with the high is exactly a price time. So this is an unbelievable, it's 15 years, and by 1 month we've broken above the previous time match. That says to me that there's a real good chance that this is G/C, and that when we do get a pullback, it's going to be a pullback, no matter how deep it is, a pullback that at some point has to be bought because there should be higher highs. Wow. How about that? All right, let's move on. So S&P, I gave you the limit to the downside. Upside, 1 penny above 2134.72, and you've extended. If it's today or tomorrow, I will be away tomorrow. So I'm just giving it to you now. If it's today or tomorrow, it extends leg B. If it's Friday, without doing it today, that'll be leg C. So far, good action, should go higher at least for into the next week. All right. QQQ series, the QQQ series trading at 158, up 56. I've liked this action, and I'm suggesting that there is going to be a test of the 111.16 level, and if it breaks above that, it starts to make leg D in the weekly chart. I've been waiting for that for a long time, and now we've got all our little ducks in order if it does that in May. Why? Because you've got G/C in the Dow, you've got it in the S&P, and you've got it in the QQQ Trust series. Let's go on to the New York Stock Exchange, and support is 109.50. New York Stock Exchange has gone to a leg C right here. It'll be a peak C if there's no new high, but so far it's a leg C, looking quite good. Now this is very interesting because the weekly chart has gone to that leg D. There it is, leg D. And even more important than that, you've got the monthly in leg C. How about that? Now we've got the Dow, the S&P, the Qs, and the New York Stock Exchange in a potential leg C to the upside. Woohoo! Let's go on. We've got, what am I running out of here? IWM. Did I do the IWM? That's been lagging, and it's still lagging in a sense, but it is gone. It is extended leg C, 125.46, 125.47 today. So trading at 125.39, up 28 cents. There's a good chance that it's going to get close next week towards the opening candle of 126.21, which was the open on the 27th of April before you started that major plunge to the downside. Now, serious plunge to the downside. I wouldn't say it's major. And that says that what we've got, 127.30. It's going to be a big... I don't know if we're going to get over that. We might get close to testing it. I just don't know yet. Let's go to gold. Gold has been very weak lately. It's still weak. It's trading down 3 at 12.05. There was a peak D. I haven't yet put the down arrow yet, even though price-wise it absolutely looks like a down arrow. But the MACD is still holding quite well. Stochastic's gone under 80% at 71%, and you've got these arch formations in the weekly chart, which tells me I must look at the dollar to see what it's doing. It had a great 2 days, taking a digestive day, 3 days actually. So this is a leg A, possibly a peak A. Really very important here. Why? Because if the dollar starts to slide and it goes underneath 94.30, it's at 95.32, they could very well become a single leg A syndrome. I call that the failure syndrome. Going to be watching this real closely. That should help the gold. Because gold is really stuck just in a trading range. Just as at this point, the dollar is really in this trading range. Same with the euro, which made EUR. I don't know if I even had a chance to do that for the last 3 days. I wanted to show. There it is. Now I can put a down arrow in the euro chart, daily chart, and the weekly chart has made a leg B. Now it's almost certainly going to be a peak B if there isn't a very sharp spiral to the upside to go over the 1.14659 high of last week. So in the meantime, back at the ranch, the monthly chart is looking like crude oil. Crude, it does look like a crude chart, doesn't it? Look at this. You've got your propeller shaft in the middle here. You've got all these U-shaped, arch-shaped failures. Look at the crude oil. Look at that. Crude oil right now is up $1.56 at 60.54, but there's that pattern. So we're going to be watching all these things very closely, having a nice bounce on the daily chart of crude oil. There's at 1 to 1, A to B equals C to D, and a nice bounce. I'll be right back. Basil Chapman, Tiger Technicians Hour, and the Dow's up 4, the S&P's up 5. I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just finish up these stats. We got the Dow 17, S&P's up 6. We got the this is very interesting. Crude oil is bouncing back. Crude oil is bouncing back at up 150 at 60.5. This is the chart of the USO, which is the United States Oil Fund, LP. Let me just finish. This is the 120-minute chart. You know, I looked at this and I decided that I was looking at the SCO, which is the inverse, and I wanted to buy it for subscribers. And then I said, no. Just be careful here, because crude oil is just more in the trading range right now. And I don't know, after that big smash to the downside, whether it's going to make a big dive to the downside. So maybe it's just better either to watch it and just see how the USO does, how the SCO does, and just treat it as something to watch. Well, look at this nice bounce, but it's gone from the. This is the classic Tom and. A to B equals C to D. You know, Larry uses it, Steve uses it, many people. This is a lightning bolt pattern. So it goes from 2150 straight down for 2 days, then 4 days up, and then whoops, goes even a little bit deeper. It's almost like a butterfly in the sense that it expanded from the 1-to-1. I'm just doing about ratios, not the pattern itself. Now what we're looking at is a sense that it's bounced and gapped up over the 9-period moving average. So it's going to have a little bit of an attempt to get to maybe the 20. I think there's a glut of oil, but that doesn't mean that you can't have these bounces. So I would say that 20.70s is probably the area to watch closely, because if you close decisively over the 21.70 to 21.15, let's say 21.20 area resistance, that says you're now making a cup formation. And these patterns have been repeated, just like I showed you the Dow making that soft, what I call a soft W, 2 U patterns put together, or cup patterns, rising patterns put together. And therefore you can go a little higher on the right side. So you're looking at the potential here for something like that if you can get the USO to bounce a little higher, about, let's say, a point higher. And that's going to be very important. So I have a question here. Hello, Mr. Chapman. Oops, thank you, Mr. Chapman. Wow. Not sure if you're going to do your show today, traveling and all. Long USO with multiple ETF, entered at USO price of 19.86. Oh, very nice. I didn't get to see anything like it. Using 60-minute for signals, what levels would I look for? And what signal move above recent highs? Unable to call in. Well, watch show is always tonight. Thanks for everything you do, Greg. Okay, Greg, this is what I'm looking at. You see, let me open this up. We'll look at patterns. This is really, we're all about patterns here. So you see that 200-period exponential moving average in the 120-minute chart, this coral-colored thick line moving average at 19.33. It hasn't gotten there. It's bounced really strongly above it. What's really important about this bounce is you've got the stochastic giving you a buy signal to buy mode by crossing positive and going over 20%. You've got the MACD turning up, and just today is the first signal to say it's trying to cross above, and that would be a buy mode. So now the stochastic is given a buy mode signal. The MACD, if it closes anywhere around here on the 120-minute chart, will give you a buy mode. What about price? Price is the arbiter of a trend, right? Not just the technicals. Well, the price is done beautifully, but how does it handle the left side resistance? And that left side resistance is 20.55. Twice it hit there, 20.53, 20.55 in the 120-minute chart. So I'm prepared to say, yes, one cup formation, fails. Here's another potential cup formation, and I'm suspecting that this cup formation will fail if two things don't happen. One is that any pullback doesn't close decisively on the 120-minute chart below today's low of 20.20, number one. And number two, if it does go higher from here, that any pullback is just very minor for maybe a little bit of tiny candle, maybe two candles, and then it breaks by the end of the day above the 20.55. I would say that suggests that you've got two things going on. One is it's going to challenge that dashed line, declining line. This is like Technical Friday, except it won't be a Friday. So here's Technical Friday. And in time price to the left side, right side, this is extended a little deeper, and it is cupping very nicely, but with a gap. In fact, it's an island reversal, but crude oil and bonds, these extraneous things can gap all the time. So I'm not interested too much in the gap. The unbalanced volume is acting well. The histogram hasn't gone positive in the MACD. How does it fail? It fails by closing, this is on the 120-minute chart, under 20 and holding them for 2 out of 3 bars. So I'll finish this up on the USO in a moment, because I think at this particular point, it's worth taking a little time to look at crude oil. This is a factor with the airlines and others.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back, and we're looking at the Dow of 20 S&P up 6.5. And as we're talking, someone was listening to us because the second candle in the USO has gone to a slightly higher high. Pressure, and that's good. So that says that the level to watch, and in this particular instance, when I'm looking at it, let me just go back to the actual question here. So if you, by tonight, you will know whether or not I'm correct in this, because the way it's looking is that a test of the dashed line is going to be really important, which is, it depends where it is. It's a downsloping line, but let's call it for now 20.79. Call it 20.70s, okay? A close in the 20.80 level says I'm above that. You can now get rid of that line, although it could become a support line in the support area. Mostly what we'll be looking at is the second cup formation as taking over. Now, when we are looking at the actual candle move with a gap to the upside, we've seen this kind of thing before. It did that to peak C back in on the 12th of May. At 1:30 in the afternoon, pulls back, goes to D, and that's the line that really starts this decline. Let me just, I think I missed it there. The line itself should, actually, I'm going to make the line. I'm making the line 2 lines. This is the first and this is the second, and I'll explain why. This is what I like to do. I'm going to make it a different color, and you can see exactly what I'm talking about. So this is going to be green. This is going to be red. I'll make it pink. Pink. Now, what I'm looking at here in the USO, which is the United States Oil Fund, trading at 20.56, up 72 now. Whoa, as we're speaking, it's getting stronger and stronger. This inside track resistance going from that exact high, peak F, on the 6th at 21.50 in the Chapman wave, to the decline and then the rebound is the body of the candle. Why? Because it has another candle with a high and another candle with a high. So those 3 points of contact says to me, that's confirming more an important trend line than if I just merely take it to the top, which I usually like to do. And that just says, hey, be cautious. Be a little bit more rigorous in your trend line move. And that says to me, now we've got a line that says, very good. I've got a very clear 20.60. Break that. That's the first thing. And then you've got this very strong resistance area, which will become the 20.75, 20.78. So that's what I'm doing on the short term. Now, I know that sometimes you like to get a move, you like to pick that move, and you like it to stay in place. We all do. But you particularly like to have those bigger moves. So if that's the case, the really big thing is that by Sunday night, you want to see crude oil higher. By Monday, Tuesday. Oh, and then the whole day Monday, Europe is trading. We're not. Then you want to see by Tuesday, when we come back, that crude oil has not given back all the gains, which it could do between Friday, Sunday night, Monday, and Tuesday of actual trading. So what you want to see is that instead of coming back under 20, 2010 to 20, let's call it, it is in fact turned the 20.50s into tremendous support and is trying to go for the 21s to 21.10 to this 21.20 resistance area. There you are. That's what I'm looking at. So far, yep, great that you entered that price. And I would say one thing. The way I'm looking at this, I would not take a loss in your position. You could add a little bit to it and have that as a trading position to try to keep this as a core. But I'd even say make sure that you take at least a few cents profit at worst. Don't give back anything. Why? Because if it goes back to your entry price, it's probably going to go lower and make yet a second A to B equals C to D. Then C to D equals E to F, that type of thing. All right? What I call in the Chapman wave, lower H pattern, the dreaded H that keeps fading on the left side. That's what you got to be careful of. Good. So we're done with that. And I want to look at Amazon. Why? In the den, Jay asked me, so we got Jay and Jay said, what, Amazon, what was the question? Question was, I lost the question. So the question was Amazon. Oh, Basil, can you look at Amazon? Okay, that's easy. So I'm looking at Amazon, and you remember I meant to do this, and I think I did it, and then I took it out because it was a little messy. But I'm pretty sure this is what I always do. I grab the top, and I grab the bottom, and I make a rectangle formation. And then my rule of thumb is that in a rectangle formation, if you take out the bar that skips right over everything else and goes to a spike higher, but then the price starts to take out the low of the gap and keeps going into the gap, you have to wait a little bit. Once the gap base is formed, then in a shorter time frame of whatever you're looking at, you want to look at it and say, okay, am I in a rectangle formation that in the Chapman wave can start to move to the upside that goes what I call an inside buy mode. They can go peak A, peak B, peak C, and then peak D goes close to, doesn't get to the previous high, or it tags it exactly. When I say exactly, I mean within a penny, either up or down above it or below it, or it breaks above it, but not that high. And then you've got to be careful because you could start a down move that goes back into the middle of the rectangle. If it hasn't got to the previous high and goes to a D and then starts a sharp pullback, it can go all the way back to the bottom. That's the way I look at that. Think of it like the same rule as the dreaded H pattern or the H pattern, lowercase h, upside down like a Y, inverted Y. So now what we've got is Amazon's acting very well. It's got the outstanding leg C that became a peak C at 452.65 with a round number 377 low. So let me 452.65. Let me type that in. Because that's going to be your objective, 452.65. And if I'm correct in my analysis here, There should be a move in Amazon, which goes into next week, but we might run out of time. I don't know. But it looks to me like there's a move in Amazon that if it has to close above this candle here, the candle of the 11th of May. 439 was the round number high. It's got to close above 439. I don't care if it's 439.01. It must do that. Why? That'll establish not just a new leg B, but it'll say, hey, there's a chance that regardless of the 120-minute chart, which has had a strong leg A to the B. Oh, I got to talk about something else. Let me show you something. Oh, this is like Technical Friday. What a beautiful day. Right. You see that peak, the trough went to peak. This one went to C, D, E, and then it went to an F and then pulled back. Now this one goes A, B, C. It goes ho-hum, and then bam, whatever the news was, earnings, good earnings news. And on the 24th of April at 11:30, that candle spirals to its high of 452.65. 452. You think I'm going to remember that? I've typed it in twice now. Let's see if I do. 452.65, and that's peak D. I think that was a Friday. I don't want to check right now. On the 24th of April, let me just check that out. 24th of April. Yep, it was a Friday. Remember I said, I hate when there's news that gaps up on a Friday to D, E, or F, and then you would start to see it give back those gains. And the next day, we had a whole bunch of stocks that did that. So here it is. It goes all the way back. It pulls back to what? 415.55. It goes to ABCD, again another D. Boy, these Ds in the Chapman wave are really something important. And then it pulls back, and now it's got A to B. And I suspect that you've got an upside rectangle, and that the rectangle suggests very strongly in the most recent one that you've got this pattern right here, and that what we're really looking at is a chance to break above the round number 439 high, and that could be C, it could even be a D or E, and then it comes back for a little bit of a retest, and that takes us into the middle part of maybe of next week. And that's where we should be seeing the Dow and the S&P in their maybe starting leg D up or something like that. So this is a very important period, but so far things are moving gently to the upside, and that's kind of what I've been calling for. Gentle move to the upside with nominal new highs in the S&P and the Dow. And at this particular point, Amazon's acting very well. Jay, you're long, and I think that's great because all you need to do is to put your stop. It could go into the rectangle formation. I'd even say you could put your stop under the 418.36 low just for the next day or two. What you really want to see is that it doesn't even hit the 9-period moving average in the daily of 427.25. And remember, the weekly is still in leg C, a peak C. There should be a D. That's just the way it works. There should be a D. The MACD is very strong. Stochastics at 80%. I think there will be a D. Good eye. And yeah, that's all I can say. Good eye. And it should make an all-time high about 452.65. Okay, next thing that I had is a question. So let me swing around here. There was a question. I don't want to miss that. Oh, yeah, I've spoken about the IYT. So what about the IYT is the question. Well, the IYT, it deserves a bounce. Yep, it's got a wonderful bounce today. It's at 153.40, up 87 cents. Unfortunately, it's just come from the most horrendous down move. The transportation iShares ETF was, in fact, once upon a time, fairly recently in 2014, in November, the week of the 28th, it hit a high, all-time high of 167.80. Since then, the monthly can show you that it's making lower highs and slightly lower lows. In fact, that 1-to-1 I can get rid of over there. Do I hear music? No, I don't. Always hearing music, huh? Okay, this is like an arch formation. So we've got to be a little bit careful, but I don't want to get too carried away. I'm just saying it's like an arch formation. You'll only know that it's a real arch if, in fact, the 150 support is taken out within the next few days. And on a monthly basis, on the 29th, what's the last day of the month? The 29th, yes. On the 29th of May, it closes under 146, because 150, where are we? 155 is the 9-period exponential moving average. So I want to give it a little bit of room. And if that's the case, that really does look like it could be a peak F. That's a serious thing. That's the reason why I'm saying nominal new highs in the market, but there's a real good chance that we are starting to see a breakdown that is suggesting to me that we're in for our next attempt at going lower, and that should come towards the end of next week. And there it is. There's that channel that you got to look at. The channel is breaking to the downside, and all you need to see is a close under 150 on a weekly basis to say, heads up, not good action at all. In other words, the upside at this particular point with that ugly candle from yesterday says by Wednesday, this coming week, Wednesday or Thursday, if there isn't a close above 155 to 156 resistance to try to attempt just 3 days ago to get to the high of 157.34, I would say that's not good action at all. And that makes me somewhat concerned about the overall market. Not that I believe in the Dow theory per se. It might be great. I don't know. I've over the years, I've just found that by the time you get the confirmation, it's already too late. That's all I've found. And in fact, if you think recently, when the Dow was making its high and the transports were making their high back in November of 2014, everybody was talking about how wonderful it is that you've got some kind of Dow confirmation theory in progress. And then look what happens. Who knew that you'd get such a deep correction in time? A deep correction in time. When you think 167 down to 153, what's the big deal? It's not even 10%, but it's time that it's taken. And it's taken in time when crude oil, in fact, it went even lower. It went much lower. So this is a little surprising. Actually, what it's telling me, I said maybe now 6-7 weeks ago that I believe that we were in some kind of a corrective period here, that there's some kind of mini recession taking place. I wouldn't be surprised. I wouldn't be surprised at all if you're looking at the airlines. There's a huge slowdown in the airlines, and you wonder about, oh my goodness, look at that. Look at this. This is the XAL PG/C in the monthly. Maybe it'll turn out to be a C, but right now the D in the weekly, that is lower A, B, C. This is leg D to the downside. Now, once again, it's not the end of the world. It's not the biggest price for the amount of time that it's taken. You would have expected that it would be much deeper. You'd expect that the XAL, ARCA Airline Index, would be trading at about 87 to 88. Because that's what the time and the way the MACD and stochastic look. I would have said, if you just showed me this over here, the MACD and stochastic in the weekly, I would have said, wow. You say that it hit 108, by now it must be down in the 87, 88 area. And look, there it is at 96. In a sense, that's not a bad divergence, but at the same time, this is the sector that should be leading. How could they be when they have full planes, etc.? What's going on? Something's going on. It's going to do with profits, and we'll see that at some point soon. And not only that, you've got other sectors that are also doing the same within the transportation, the rails and the truckers. So, and the truckers are saying to me, "Hey, slow down. That must be an economic slowdown." All right, so that was the question on IYT. Let me go back because the question was IYT. I've drifted into other areas, but IYT says very clearly, a close below 150, not good at all in the weekly chart. A balance has to take it all the way to the 156.80s to get above the 9-period exponential moving average. Hadn't been able to do that for 4 weeks, so it's a very critical period because there's a potential for a cup formation, but that falls away if you go under the week of the 10th, 152.03, close below that, not good. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Yes, folks, don't forget, Larry and the Futures Hour. Oh, this is a perfect time for that. So I look forward to it, as always. A couple of things I just want to talk about here. So I had a question about AA, Alcoa. I don't like this arch formation here. If Alcoa starts to go, it's at 13.06 down a penny. If it starts to break, the 120 minutes suggests that, yeah, there could be a little bit of a bounce here, peak A, peak B, peak C, peak D. There's another one of those, whoops, and it comes down again. The way I'm looking at it is it had its opportunity to rally and hold and then go to higher highs, and it didn't take it. Instead, it's testing this week, is testing and breaking under the 200-period exponential moving average in the weekly. I just give it another few days. I don't think there's a rush, because if it starts to move up, I think you'll have plenty of time to get it. Usually moves up in chunks. So you'll see it if it gaps, if it has a 20-cent up day, that's a good time to look at it. But boy, it better hold that 1280s area. So that's that. And yep, aluminum. I know about that. There's they're talking about aluminum, and of course Ford is selling those aluminum trucks like hotcakes. I just watch it. That's all for now. It's on my list, believe me. Now here's another thing: the semiconductors, the SMHs. Not a bad move. This is peak A, peak B. If there's no new high today, there's a cup formation. I looked at this as a potential short, stepped aside, said, hey, you know what? I don't think so. Let it go a little higher. So here's another reason why I think we're moving to the upside in a steady move. It isn't an exciting move. It's a very quiet stealth counter trend, right? I call it a counter trend because I think majority of stocks that I'm looking at, a lot of them are actually quite weak. We can have a slew of potential shorts next week or the week after if what I'm looking at comes to fruition. So I'm about to wrap up. And I'm wrapping up for until Tuesday when I'll be back. So let's just do this. Dow. I suspect we will make leg C to the upside in the Dow above 18,351.36. That would suggest that next week we've still got a leg D to come. That's number one. MACD is very strong. Stochastic is very strong at 93%. So that makes the support at 18,200 to 18,180. Really important to hold if for whatever reason it starts to break down. The S&P, SPX.X, very important. I think that it'll make a leg C. If it's not a B extension today, it'll be a C tomorrow or on Tuesday. And my looking at it says 2134.73 would start the next leg up if it's not today, or just extend it if it's today. If it's today, at the close, that's very positive. Now, I always look at, I didn't look at bonds. The TLT is bouncing nicely. I'm just calling this a bounce for now. It made the one-to-one extension for A to B equals C to D, the lightning bolt pattern, almost to the penny to the downside, deserves a bounce. And I think I'm calling it for now a bounce. There's a chance because I think that my Japanization of our bond yields is still in force. I have to stick with that for now. We will see a change of pattern if, in fact, the TLT starts to break 116 support next week. If it does that, then I have to say, well, you know what? We could be in for another one of those strong dips that we had back in 2012. But it also starts to put into jeopardy my theory about the United States following Japan by lowering interest rates to almost zero. And that would also suggest that the economy doesn't strengthen, that they keep being afraid because some kind of report comes out and it's not that great. So that's that. Here's the other thing I'm looking at. So that's the TLT. The VIX index, the VIX.X. You see, oh, look at that. Plunges down 49 cents today at 12.39. That's changing the pattern of the weekly chart. And that's suggesting that at any point, if there is going to be a break to the upside, it's just going to be a real bad news thing that's going to have to, almost daily, you're going to have to hear it. And that takes a lot to build in the news media, daily action that's really negative. So far, this is bullish for the market and does suggest that we can look at higher highs in the index.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.